Hello, hello. This is Abel Pacheco, your host at the Five Talents podcast. We are super excited today because we have Miss Kaaren here with uDirect IRA. She is one of those amazing speakers and educators that I've got to meet and hear at some of our past multifamily conferences and events. And I think we met at an event in Denver, and she caught my attention. I go, you know what? We absolutely need to have her on the show. So if you haven't heard Miss Hall speak before, you're in for a treat. She's going to provide a little bit of education, a little bit of knowledge, and also we're going to just break into her, a little bit about her as well. So what kind of background she has personally. But we're excited. Thank you for joining us at the Five Talents podcast. So,
hey,
Kaaren,
thank you. Really appreciate it.
Yeah, we appreciate it. So why don't you tell us a little bit about yourself, please, in your own words.
Okay.
Your background and who you are.
Wow, we were just talking about this off before we started, but I was born in California. uDirect is based in California. We're a national company, though, so we have account holders in every state. So California is a big part of my life, but I've also lived in Texas and lived in Washington and did a little moving around when I was a lot younger. But my background, as it applies to real estate investing and investing in general. Well, it's almost all real estate. I was different things, a property manager, mortgage loan servicer for a long time. And we called that cleaning up after the elephant. After the loan was made, you got to clean it up. And we did that. And then I became a loan originator for a lot of years until the Great Recession. And we all lived through that. And so did I. And so that was about the time that I got into self-directed IRAs in 2007. And ever since then have been helping people self-direct their IRAs. And now uDirect IRA Services has grown from a pea, tiny little bean, into we have about $1 billion under management.
All right, a billion with a B. That's always fun, right? So, CEO and founder of the company. Sounds like you had a tremendous run in real estate in the past, and just kind of all naturally unfolded for you. But a lot of people outside looking in, they go, I wish I could do these things. What was it that got you started in real estate in general? I mean, what was it? Was it your career move? Was it an investing choice? Was it your background? How'd you grow up?
Yeah, I laugh because pretty much everyone in real estate, they had another job and then they made the logical, leap into real estate. I think that goes for pretty much everyone. But I was a radio announcer. Okay, I did light rock. Let's talk. Like that. So smooth jazz in Texas. And anyway, so I've been all over the place doing radio too. So, and then it just wasn't paying very much. So I thought I need to do something else. And then that's when I got involved in real estate. I've had real estate licenses in 3 different states. And just, you need to know that everybody should get a real estate license, especially investors, just so you really, really understand the animal. You need to understand if you're going to invest, right?
Yeah, education is absolutely 100% important. And if Kaaren, you're kind of saying that from as a professional, when you figure out which classes, which certifications, you're going to have to take all that education. So figure out to get it one way or the other. Is that right?
Yeah, right. It's so true. Yeah, it's so true. I mean, there's so many different aspects of real estate. I don't have to tell you. We were talking earlier about entitlements. There's so many different ways you can be a real estate investor. And that really, coincides with the self-directed IRA world too, because every way you can be a real estate investor, you can be a self-directed IRA real estate investor as well. But there's even Airbnbs. I like people renting. They don't even own real estate and they're making a fortune with Airbnbs. And there's that. And private equity, when people are building commercial buildings, taking on capital, they can do that with self-directed IRAs. Mobile home parks. I mean, there's no aspect really of real estate like REITs, passive real estate trusts. All of this can go into self-directed IRA. So of all the investments that people do through uDirect, I'd say 95% have to do with real estate, either like maybe even a note, buying, performing and non-performing debt, all based on real estate.
Yeah, get it on. Well, we're real estate folks. You're real estate folks, so that's great. We'll jump into a good conversation, and thank you very much for just giving us a little bit of insight and background to how you got to where you're at. So that's awesome. So really from the IRA standpoint, here's a lot of investors that I speak to. They don't realize that they can invest with real estate with their retirement funds. They're qualified retirement plans, either from work or they've got something that they hadn't rolled over and they're trying to figure out what to do with it. And that was really my first investment as well in multifamily syndication. We took some money out of our 401k from work. I had moved jobs. It became available. We directed it, and then we moved it into a multifamily syndication. And so we were invested in 100 and something doors, right? So there's not a lot of folks that really, understand that. So part of, I guess this is really just education, letting people know that they can, right? So on your side, what's your purview on, educating people in this arena?
Wow, I've been educating people, like I said, for about 15 years now, and I've spoken to tens of thousands of people about investing. And you're talking about private placements, investing in a multifamily deal through private equity, and that is the number one asset class for self-directed IRAs. Is actually private equity.
Number one asset class. No kidding.
Number one asset class.
Well, I didn't know that.
But there's so many ways to do it, isn't there?
Yeah. I didn't know that was the number one asset class out of everything that you guys see, or
as an industry.
As an industry. So everyone involved. What's the second? Do you know?
Probably notes.
Notes?
Yeah, typically secured notes and buying and selling debt.
For those that don't know what a note is, maybe you can elaborate on that for them as well.
A note is a promise to pay. It's a promissory note, right? So, obviously you borrow money and you've got some factors when you're looking at a note. You've got a principal amount, you've got a rate, you've got a payment schedule, you've got something in there about what happens if you make a late payment, and you've got a maturity date. And those are some of the elements of a note. But basically, it's just lending money. We do it all the time. If you use your credit card, it's a form of lending. But of course, mortgage is all about notes. You've got that secure instrument behind the real estate, making that happen.
Yeah, well, that's eye-opening. Multifamily sounds like syndications or passive investing. So basically, that's what we do. So if you're listening on our show, you kind of have heard me talk about this a bunch. But buying something bigger than what we would have been able to buy on our own is a multifamily passive or syndication opportunity where we're all putting our funds in together. A passive investor can move money from an IRA to a self-directed IRA or any of their qualified retirement plans, move it over. And then for us, we take limited partner passive investors that put their investments in. And then the second, I guess the other class that's highly leveraged with self-directed IRAs is the note side of it. So the notes being when we were single family investors, what we would do is work out some kind of creative financing, some kind of opportunity where there was a promissory note, like Karen's mentioning, promissory note, promise to pay. Hey, it's $100,000 at 8% interest for the next 3 years and a balloon payment afterwards. Yeah. And so somebody can actually sell that. If you're tired of holding it, you'd sell it, and our IRA investors can invest in that as well. What kind of other asset classes do you see a lot of, Kaaren?
Well, one that reminds me of what you're saying would be, for example, tax liens, because just like you could sell a note, say, for example, you have a note that was $100,000, and maybe you've collected $5,000 of that $100,000 so far. So you've got $95,000 remaining to be paid, right? Mm-hmm. And so you might sell that note for maybe $90,000. You sell it at a discount, and you've got the ability, the buyer does or the investor does, to collect $90,000, or $95,000 after they paid $90,000. Okay. Same thing with tax liens. A lot of the taxing authorities, counties, and so forth, they'll have property tax liens, and maybe they need a liquidity event, and they sell their tax liens, and so they sell them also at a discount, so you can buy them pennies on a dollar, and then be able to collect more than you have invested, and that is the profit, cycle, or the profit, I guess, structure in a deal like tax liens, which is, just a lot the same.
Yeah. Some people would like some cash flow today. Some people are looking for money today. And although they have something of value, it's worth more if they hold on to it. They may need to cash out, and somebody's willing to step in and buy a piece of paper, literally, at a discount. And so one investor comes out, a little bit of cash today, the other one buys a future value, and all of these things are opportunities for the self-directed IRA investor to put their cash in and still be within a qualified retirement plan, which is the cool part, right?
We're making it sound so easy. But my friends that buy and sell notes, I mean, it's not easy. It's definitely a lot of work. And when you're in a self-directed IRA as the investor and you've got these notes, but they need to be serviced, then you have to be careful that you don't commit a prohibited transaction. So since we're talking about self-directed IRAs, we have to talk about this for sure. So there are certain things you can and can't do with a self-directed IRA. You're disallowed to your IRA. So you can't do what's called provide services to the plan, but you can hire a third-party note servicer, for example. And if maybe the borrower isn't paying back, you can call them and ask them to pay it back. But as far as like real loan servicing or maybe a foreclosure or something like that, you need to hire a servicing company, a third-party company to handle that kind of activity for your IRA. So in an IRA, it's always a little bit different than investing with your private cash.
Got to talk to the pros, got to talk to the experts, got to make sure somebody can help you. I like what you're saying. Yes, we're making it sound easy. I would say most of this stuff is simple. It's just not very easy, and it's simple, maybe not to me, but if you talk to the right expert, they're like, oh, I've done this 1,000 times. Let me show you how to do it. And they structure it correctly, and we just leverage the experts.
Well, that's a great thing about a podcast like yours is anybody who wants to get into this real estate space in whatever way, listen to podcasts like this because you get so much great, juicy information from experts who are just so incredibly generous with their expertise and the little tricks and tips and stuff that can make a huge difference. So, like investing in real estate, there are so many different ways to rehab a property and to, acquisition. Every step along the way is a challenge in itself, but you can do that using a self-directed IRA.
Yeah, love it. Okay, well, this is good. Thank you very much for the insight. Yeah. And so you're in California.
Yes.
You've got a network and some experience in that market. And what's going on over there? What are California investors doing right now, and maybe through the past couple of years? Give us a little bit of insight, because we're in San Antonio, Texas, so different side of the country. How do you Californians? Guys do?
I'm sorry, I was going to say if Californians are moving to Texas, they're probably investing in Texas. I mean, it's hard to make a deal really cash flow in California. I know a couple of guys that are very, very good at it, but they're also extremely experienced, and they have got, the crews, and they have developed a whole network of support from, escrow and title people to, to the guys that are doing the rehab work and everything. So you have to have a real crew. You can make money in real estate investing in California, but for a beginner, it's probably not the place to start because it's usually a lot more skin in the game to begin with.
Yeah, not for the faint at heart. The numbers may have a couple more zeros than the Texans are used to, and you may have a few less doors for the same price, right?
It's true, but you can always find a deal, and there are a lot of great real estate investing clubs too, where people are partnering together. I have a real estate club. We don't partner together in our club. It's not like we're looking for assets together, but it's an education club called Orange County REIA, so OCREIA. And so we meet the second Thursday of every month on Zoom right now. So you can listen to Texas.
What's the link to that, the OCREIA?
Yeah, it's OCREIA.com. So OCREIA.com. And so we're having Gene Trowbridge talk about syndications, and we've had Matt and Amanda Hahn come on, or Amanda Hahn and Matt McFarland come on from Keystone and talk about tax-advantaged real estate investing and so forth. So we're always educating and talking to people about, just again, the insights, like we're talking about now with self-directed IRAs.
Oh, perfect. Yeah, if anybody's in the Orange County area, go reach out, and we'll put that in the show notes so that way they can potentially attend and go hang out with a great group over there. That's awesome.
Yeah, and sometimes we do investor like networking things. We're in fact in March we're going to collaborate with the California Mortgage Association and do a really awesome networking event March 9th in Newport Beach. So there are always events like that. So great opportunity for people to get together.
All right. Well, hopefully we get a few attendees that heard the Five Talents podcast, and if you do, reach out to Kaaren and make sure to let her know that you heard about the event on the show. So that's awesome. Well, we've talked about a number of things, which I'm just happy that we got a little bit of education, a little bit of insight from your vantage. Where do you see the investors that obviously are leveraging IRAs? They're winning.
Mm-hmm.
I know the IRA company, you all can't back an investment. You're not,
right.
you're not giving anybody investment advice. You're not registered investment advisors. You're not,
right.
Financial advisors, but you see a bunch of these deals.
Yeah.
Where do you see people winning the most right now? And how are the most profitable, asset classes? What are they? And maybe just give us any of that insight from your vantage.
Yeah, well, we talked about how private equity is the most common sort of asset class, but when in any asset class that you're dealing with, I'm going to talk about due diligence here, because no matter what you're doing, we've talked about the different kinds of alternative asset investing. We forgot to mention, by the way, precious metals, but whatever you're going to do,
you can buy gold with your IRA. So if you didn't know.
And it's not gold at home, okay? Just so you know, you don't keep your IRA gold at home. You just don't. IRS came out with something to say about that, which is great. But so you want to do your due diligence. And so recently I moderated a panel of fraud fighters at the RETA conference, which is Retirement Industry Trust Association. And so we had a gentleman on our panel, and he was a commodities guy in Chicago, and he kind of unintentionally started a Ponzi scheme. And he turned himself in.
Wow.
Served a lot of time, and now he's out. Now he's being a fraud fighter and helping other people avoid the kind of fraud that he committed. And a lot of times a Ponzi scheme where you borrow from one bucket of money and put it in the other bucket of money is just all too common. It's not usually the way people start out. They don't intend to do it. But like him, he was kind of trying to cover it to make everything look good, so he didn't have to tell people, it's not that good. You kind of just be so careful if that's you as an asset sponsor. But if you're an investor, you can do all your due diligence up front. You can look at that private equity deal, and you go to the SEC's website, you go to the FINRA website, you go to the NASA website with an extra A, NASAA, all different securities regulators, and put in the names of the people that you want to invest in. Oh, they're clean, they're perfect, they've no marks against them, and they're great. But that's not where you're going to find the fraud. I mean, we have found people who were incarcerated, people are about to invest with somebody who'd been like in jail for years. So that is a red flag.
Yeah, you want to know that. Yeah, you want to know that in advance. Yeah.
Yeah. But it's during the investment. So one of the things you want to do when you're investing, especially in things like private equity and notes, which is also, by the way, note is also a security, is to check on it along the way, and also make sure that in the agreement, you've got the ability to ask for financials and the ability to audit, and that's in writing, because you want to be able to go back and say, hey, it sounds like everything is going great. I'd just like to see the financials so I can check it out, because that's where things happen. I mean, that's how somebody like Bernie Madoff kept going. Actually, of course, he was audited and everything. And so was this other gentleman I'm referring to, because they're smart and they knew how to cover their tracks. And people just kind of got lazy, and they didn't dig deep enough, and they would have found it if they just continued to dig. So it's not just enough to do your due diligence on the front side. You want to do it during the investment as well.
Well, that's good. That's good insight. You haven't heard anybody say that, like, through the process. It's always up front, the deals, the market, the team, and that's what you're trying to really figure that part out. But through the process, you got to keep asking questions through it, right?
It puts the self-directed IRA. I mean, it's not just this thing where you invest and you just sit back in your easy chair. I mean, there are asset classes like that, but you've got to do your own due diligence, and you don't have somebody babysitting this for you. Maybe your IRA made a loan. Did your borrower make their payment? log into your account, find out, log into your account every month, pull down a copy of your monthly statement. Always be looking at your account. So you can't say, oh, I didn't know what was going on. You have to be diligent. It's your money. And if you value it, you want to stay on top of it.
Yeah. Very good. On the different funds or kind of moving money around, you mentioned something. So I do want to go back to it, right? You're like, the guy unintentionally started a Ponzi scheme. Well, what piece of advice? Well, let me give mine and then I'll ask you the question too.
Okay. Right.
Any investment that you're getting into for a real estate investment, when you're putting your funds in, one of the highlights or the key, areas that you're going to look for, is it in a separate LLC? If you're a passive investor and about to put money into a multifamily syndication, I want to know that my funds are going to go into a specific LLC and there's nothing else unless I'm investing in a fund, but even that fund is a LLC or it's its own entity that's not tied or it's unencumbered by anything else. There's no other business. There's no other pieces of property that are all going into it unless that's the intended purpose. But the point of that is you don't want your funds going from one deal to the other and another deal pulling another one down. If you're a operator or syndicator, and you have a rough moment, that one property may fail, but you're definitely not pulling from one to the other to make all the deals look better. If one fails, I mean, it's part of playing the game. Don't pull in other opportunities or investments with it. That's probably, that's what I've heard before from another podcast guest of ours. But how did the person unintentionally do that?
Well, he was trading, commodities for his parents' friends. Initially he was a young man, and just it wasn't doing so well. So he just kind of covered it up, and he was just so smart that he was able to really, really cover it with because he understood audits and he understood, and he could make true claims that were partially true, but not really applying to. In other words, like this company is our auditing company. And maybe they audited one little thing, but not the book, not the real books,
Not whatever it was.
So it was like his pride. He didn't want to say until he just couldn't live with it anymore. He dug himself in such a hole that it's just like, hey, here's all the paperwork, take me in. And they did. And I think he spent 8 years.
Wow. Well, on the flip side, now he's helping others, fraud fighters. So that's a different time of his life for sure. And you also spend some time in helping retirees with their education and, understanding, things like this, right? What word of wisdom do you have for those that are close to their retirement? They're trying to figure out these last investments and where they should make their moves. Any and all insight from your expertise.
Right. Well, I think first off, when you're thinking about retirement, it's kind of like, when is the best time to plant a tree? The answer is either 10 years ago or today. So if you haven't done it, if you didn't do it 10 years ago, then you have to do it today. But start saving for your retirement today. My kids have retirement accounts because, look what mom does, but of course they do, because they're saving for their retirement now. We are just seriously unprepared as a country for retirement. You have got to really think about it, because you're going to be there. And what number do you need? What's your monthly nut? And how are you going to meet it? And, what kind of layers of income are you going to see? And that's where a self-directed IRA is part of that whole structure, right? So maybe you've got, REITs, or you've got private equity, or you've got, a market correlated assets, CDs, and all different kinds of assets, but you want to build that. So if I was going to talk to somebody who is just on the verge of retirement, I would definitely tell them to talk to a financial advisor and get really good advice on conservative investments, because if you don't have a long timeline, you can't afford to lose things. So it's just so incredibly important to start today. If you haven't already started, get a financial advisor, start talking to them about ways that you can, build your financial and retirement portfolio with all different kinds of vehicles. It's more than just investments. It's insurance, it's so many different things, and a self-directed IRA fits into that.
All right, very good. Well, thank you. Now, if you can, I'm gonna point you back a little bit in time, and if you can project yourself to any of the younger listeners and younger, viewers that catch us here. if somebody's like starting out, I remember being my mid-20s, and I finally had a little bit of money, and I was so worried about investing. I wanted to buy something, bought a house, bought a whatever, and I was ultra conservative. I don't think I was risky enough when I was younger. And now I'm on the flip side. I'm like, well, man, I'm trying to stay conservative and trying to make sure, we're trying to balance this risk versus reward. We're trying to balance, I've got to take a risk, but I don't want to lose my money. Some people are paralyzed with fear. They don't actually move forward. Others, they're too far. They're risking it all, and they lose their seed over and over again. Can you give some advice for that younger investor that's coming out and that they're new to the investing world?
I think there are a lot of great people to listen to. I mean, like Dave Ramsey, for example. I mean, people that are talking to people younger than you and I about how to carefully be a steward of your money and put percentages, a percentage here, percentage there, and save for yourself. Because what you're doing is you're just investing in yourself. And then you're going to look for opportunities. But investors like you're a risk taker. You can't be an investor without being a risk taker, because it's always being put at risk. So you have to just, do your due diligence, learn as much as you can, and then you pull the trigger, and either you win or you lose. It's a little bit like that. You don't always know if an investment's going to pay off, but you can have a pretty good idea, with enough homework. But the best advice I would have is get started. And get some good, solid advice, because again, when it comes to retirement, it's so many different pieces. And a self-directed IRA lets you invest outside of Wall Street in non-market correlated assets. So it gives you more diversity. So if you have, something in every basket, then it gives you more stability. And that's what we help you do.
Yeah, it makes perfect sense. Mm-hmm. So on this train of thought, I'm sure you've spoken, or maybe some people have asked you to speak to their financial advisor, because their financial advisor is telling them, do not invest in real estate. Do not move your funds into this note. Do not invest in this land entitlement. You need to keep all of your money right here in your 401k at work. And, what do you experience on that kind of level? Do people ask you to reach out to their advisor? I know you're not really going. I don't know, just any of that insight for me. Like, you've got to run into this all the time, right?
Well, you know this, that your financial advisor gets paid for their assets under management, and so they have a vested interest in you keeping all of your money with them. But a good financial advisor doesn't mind you investing out of house, is what they might call it. If you're a real estate investor, you're a note investor, and you've got a financial advisor helping you with market correlated assets, and you're like, hey, I want to do this, you're going to do it. I mean, it's your decision. It's your retirement. It's your money. You make the decisions. So they can have an opinion, but they don't have the control of where your money goes. It's up to you. And that's why self-directed IRAs are so great, because, again, you've got control over where you put your money.
Yeah, I know. 401k, a traditional plan where you cannot direct you would like to, or maybe they say, oh, it's self-directed, but they don't mean self-directed. They mean self-directed. You can choose the stock options you want, right? Which is not really self-directed. They were talking about. They can say, oh yeah, you can choose any one of these mixes, but that's because they get paid, like you said, assets under management. So if you pull $1 million out and direct it somewhere outside of it, they're losing a piece of their pay, which is, we don't want to have the advice given to somebody that only can prescribe one thing, and that's all they're going to prescribe. That's like, we're going to the buffet and they can only serve one type of food. No, I went for a little bit of everything.
Well, I mean, when you're investing for your retirement, it's your retirement. I mean, it's not your responsibility to make sure that your financial advisor is, a successful business person. It's your job to make sure that you've got a healthy, stable retirement, so that you aren't in need in your years when you're not earning money. You need that stability.
My uncle, one time he mentioned, he goes, well, he was describing this story. He was like, I talked to this advisor, and he had a nice suit on and that kind of thing. But he goes, I kept looking across the table, and he was, half my age. And the question that I was thinking about as I was sitting down with him and talking with him, not that age 100% matters, but he goes, well, I know he wakes up every day, he gets in his car, he's got to go to work. He shows up early in the morning, probably stays there late at nighttime. Yeah. He's going back and forth trying to tell me what to do with my money. And I asked him, well, how much money do you have? And he goes, well, I don't really have any investment. He's like, why am I taking advice from this, somebody without an investing experience? And, you gotta come down to that mindset of like, no one's gonna, magically give you the magic, the pill to have this money grow. You've got to take some time. You got to educate yourself. You got to figure out what you're going to invest in. And then once you get some education, then you have to go take action on it, right?
You do. Now, I have a financial advisor. You probably do too. And my financial advisor helps me with different things. And she's great. And she's really smart and highly educated and understands the market so well where I don't. So I really appreciate her expertise. But I also have plenty of alternative assets. So, keeping it balanced.
Yeah. It was after that discussion that I was like, well, what kind of questions did I ask? And my uncle goes, ask him what his net worth is or what her net worth is. And I finally spoke to our life insurance person, and I was like, hey, what's your net worth? And he was like, at the time, I think I was in my 20s, and the guy goes, oh, it's $1.5 million. Okay, let me take some advice from you. Yeah. Which type of life insurance products are available? Yeah. But I wouldn't have known to even ask the question from the advisor, had I not gotten that expertise or just asking somebody. My uncle's Val was like, yeah, ask the question. So then we ask, we're like, okay, that's an expert. And when you're taking advice from your financial advisor, you want to find out, hey, what's your experience? What's your background? And then, maybe they're an expert in stock. Like, great, I'm going to take your advice. What's your holding? What's your portfolio? I've got A, B, C, X, Y, Z. Great. And you may find another advisor for different asset classes that you're investing in. It's all about education. So
yeah, my CPA and my investment advisor both are real estate investors. They get it, and that's what you want. You want people on your team that know how you play the game.
Yeah. And this is a good. Yes, I agree, Kaaren, for sure. Oh, yeah. One of the other thoughts that you kind of brought to mind was your CPA, you're a tax advisor. So we have we have a good team that helps us mitigate our tax obligations. Now, when we're cash investors in a multifamily syndication, we get something called accelerated depreciation, cost segregation, bonus study, all this extra goodness that basically gives us paper losses, and we write off our taxes off of taxable income. Now, in our IRA, it's a little bit different. You avoid capital gains taxes down the road. So maybe you can elaborate between what this is, the advantage of the IRA at the end.
Right. Well, so IRAs and retirement accounts are either tax-free if they're Roth, or they can be, or tax-deferred in a different kind of account, like a traditional or a 401k or something like that, a pre-tax account. And so that's great. That's income tax, either income tax free, income tax delayed. But these retirement accounts can come up upon another kind of tax, not an income tax, but something called UBIT or UDFI. So here's the thing. So if you're investing, say, in private equity, what you want to do is you want to look at the operating agreement. You want to look at the subdocs and say, hey, is this asset sponsor taking on leverage? Because if the asset sponsor is taking on leverage, that could pass a tax onto your IRA that you might not even know. And so, you get a little letter from the IRS, why haven't you filed a 990T? It's like, oh, what? I didn't even know what that is. So that's a good thing. If you're going to be a private equity investor, you want to find out if your asset sponsor has leverage. It's not a bad thing, because if your tax person knows what they're doing, filing your 990T, they'll take deductions, and maybe you don't owe any tax at all. You just file and say, here's what here's the money that was earned due to leverage, and here are the write-offs, and they fill that out for you, and complete that return. So there's income tax, there's the UBIT, UDFI tax, but yeah, so people usually use retirement accounts to invest, and also because you compound faster, so you've got a deal in a self-directed IRA, and then you get a liquidity event. Well, all that money comes back in your retirement account, and then all of it, it's not diminished by tax, can go back out into the next deal. So you get to compound and really, build that snowball and into a healthy retirement account.
Yeah, the IRA investor is already tax sheltered. So at the end, when capital gains tax is coming for an investor that has a full cycle exit, you put 50 in, you put 100K in, and you're getting 200K back. Well, there's a tax called capital gains tax, is the difference between the basis and your profit. And so as an IRA investor, if it's in there, it's tax sheltered. There is no capital gains taxes. So if I get 200K back, I can go invest the whole 200K into an.
Yeah, and you're also not going to have to recapture depreciation, right?
Yeah. If a deal sells early, we're trying to, we took all these losses, cash investor, depreciation recapture. Hey, you sold too early. Oh, you took too much depreciation. I want it back. Well, the passive investor in an IRA, that's the pro. That's the advantage of it.
It's a huge advantage. It makes it a lot easier.
Yeah. Another advantage for the multifamily investor, if some of you are active syndicators, operators, you're like, well, man, I have this the seed I want to put in. I want to go do a deal. That's great. You have to put cash in your own deal. You can't use an IRA in one, but if you have some money in an IRA, man, go send that out and let another operator, another syndicator, another deal, another team that's running in a market you're not investing in actively. You can go put your passive IRA funds in that, as long as you're not a general partner, right, co-GP on the deal.
Yeah, you avoid prohibited transactions, and that's exactly what you're talking about there. That's exactly right. Yeah, and that's why we talk to people before somebody opens a self-directed IRA. We always talk to them 20 minutes and say, hey, okay, what are you looking to do? What kind of deals are you looking to invest in? And we talk about what markets are you looking at investing in. We'll talk to people to see if we can hear, hey, does that sound like a prohibited transaction? Because if it does, we want to alert them, hey, this might not be kosher. So you might want to reconsider how you're structuring your deal.
Well, on that prohibited transaction discussion, let's talk about gold for a moment. So you can buy gold with a self-directed IRA. I just can't buy a coin and keep it in my house. So tell us how investors invest through gold through their IRAs.
It's really pretty simple. I mean, obviously you find a dealer, a gold dealer. We know of some too, but you find somebody who's actually selling the gold, and there are plenty of gold brokers and things like that. So then you give us a receipt, you give us a direction of investment, you give us a receipt for the metals, and then we fund that that deal. We send the money to the precious metals dealer, and then they send the money to our depository, the depository that we use. And it's held there. So it's actually the physical gold that's being held, not in this case, certificated gold or anything like that. It's not a stock in gold. And by the way, it can be gold, silver, palladium, platinum, different precious metals. Yeah, but it has to have a really high quality. It has to be like 99.99%. It's super high. So like a Krugerrand wouldn't be okay, but a Maple Leaf is. So.
Oh, I didn't know that. Okay.
Yeah.
I didn't know that. Well, very good. Well, this has been an awesome conversation. And Kaaren, for anybody that wants to reach out to you, like who do you want to reach out to you, and how do they get?
Well, anybody who's got a retirement account with a current like a current IRA or a employer plan with a past employer, you can reach out. Here's my logo, uDirectIRA.com, and I'm going to put here in the chat our website there, and just reach out to us, info@uDirectIRA.com. And we'll get back with you right away, discuss what your scenario is. And the barrier to entry to self-directing is pretty low. To have an IRA, all you have to do is have active income from a job to contribute. But that doesn't necessarily make you a self-directed investor. You need to have enough to be able to really invest in an alternative asset. So which assets are you interested in? So a lot of times it'll be people who have built up retirement accounts over maybe several jobs or several years, and they have a chunk. And then they want to put that chunk into a deal that they've discovered.
All right. Well, very good. Well, thanks, Kaaren. And
Thank you.
I think we've talked about, a number of things that if you didn't have a pen and a piece of paper, or you were running or somewhere as you're listening to us, go take a moment, hit the pause button, get a pen and a piece of paper. There's a number of discussion I think that you can go look in. A number of nuggets and insights that you might be able to go and YouTube search and find some more information. And then if you're ready to move forward, you want to reach out to Kaaren and her team. The contact information is in the show notes, and we look forward to hopefully connecting you all. Kaaren, besides the things that we've talked about, is there any other things that you wanted to highlight? Maybe something that you were hoping I asked about, I just didn't get the chance to, or opportunity, any wisdom, anything you want to leave us with? We'd be open to open ear for you to share here.
Sure. Well, I think like what's on the horizon for IRAs, it almost never changes. I've been in this industry for so long, and it doesn't change very much. But there's something right now in front of, in Washington, in front of Congress, called Secure Act 2.0. And what it may do, it looks like it's got bipartisan support. If it passes, it would likely raise the RMD age from, it was 70 and a half, and Secure Act 1.0 raised it to 72. And Secure Act 2.0 could raise it all the way to 75 gradually over years. Then that's cool, because like somebody who maybe doesn't need to take the money every month, they don't need that annual distribution, they still have to take it and pay tax. But if you don't have to take it till you're 75, you can leave it in there, let it continue to grow for you, tax deferred, and then take it out at a later age. I think it's nice. It's the government acknowledging that we're living longer, right?
Oh, okay.
So that's something on the horizon.
Okay, maybe just elaborate a little bit more, because my head is definitely not in 70, 72, 75 right now.
Yeah.
But for those that are thinking about it, the implications of pulling out early or staying late, that's what the act is.
It is. And even if you're not 75, what if you have like a loved one who's in their RMD phase pass away, and you inherit their IRA? Then you have to take RMDs based on their life expectancy. And so then it could apply to somebody who's not yet that age, but it's just if you receive that money from an inherited retirement account, then it would apply to you.
Okay, got it. Well, makes perfect sense. So how do people act on that if they want to, go have their voice be heard? Where do they go?
Oh, I think it's already a done deal. They can always reach out to their congressional representatives. This Secure Act 2.0 passed the House already. And it's going before the Senate. I thought, here we are in December. I really thought it would have cleared by now, but maybe any moment, just check your watch. Maybe maybe it's passing.
It'll be there by now. We're recording on December the 7th, 2022. So depending on when the show drops, we'll find out. But Kaaren, thank you very much.
Thank you.
A pleasure, an honor. We're thankful and appreciative that you'd come talk with us a little bit today.
Thank you so much. This is great.
All right. Well, thank you very much, everyone, for listening. This is Abel Pacheco on the Five Talents podcast. We're super excited that you come watch or hear another show. So please go to our page, like, subscribe, provide us some feedback. You all have been doing amazing. We've got a bunch of 5-star reviews, bunch of written comments. I'll just appreciate it. And if you would go reach out to Kaaren and tell her that you heard our conversation here, that'd be awesome as well. So thank you very much. See you on the next show. Thank you, Kaaren.